have with me the Revenue Secretary of the Government of India, Mr. Shaktikanta Das. Remember, whenever the Finance Minister or the Prime Minister travels to, say, Germany, France or Canada, and they promise that there will be tax stability in the country, it is Mr. Das's job to ensure that these promises are kept. Thank you so much for joining us and taking the time out to join us on ET Now. So I have to begin by asking you this question that, there is this growing sense that the government's talk on ending tax terrorism is well intended, but perhaps it is not, getting converted into action. How do you dispel this notion?
You have to look at the number of steps which have been taken in the last several months to address this issue of what is often described as tax terrorism. In the past, there were some aggressive assessments. These aggressive assessments were partly because there was an aggressive interpretation of the law. Part of it was also due to certain, aggressive tax planning done by the various corporates. In the last 9 months, we have, in the 2 budgets that the government has presented in July last year and in February this year, a number of simplification measures have been taken. Wherever there was ambiguity in law, especially with regard to indirect transfers or with regard to transfer pricing issues, all those cases, all those sections, tax clarity has been provided, and we have issued a detailed circular to the field level people to make correct assessments, not get swayed by the amount of money involved, but go by the actual spirit and the application of the law, go by the letter of the law. We have also advised and given strict instructions to our officers to be available to the taxpayers, and number of instructions, like for example, to be available to the taxpayers for his clarifying his doubts, to be available in the office on Wednesdays. Another example is, to sort of, if you are reopening a case for scrutiny, then don't go about a fishing expedition. Confine yourself to the point on which the case was reopened for scrutiny. So,
go by the textbook.
Overall, go by the textbook. So, overall number of measures have been taken in the last several months, and at the field level, one is witnessing lot of changes. It is moving, it is happening. So, I would not agree that no steps have been taken. Number of steps have been taken and it is showing results.
So on hindsight, do you believe that the budget did not aptly address the MAT relief that you've given to FIIs and FPIs? Because otherwise, how do you explain this entire outcry?
You see, on the issue of MAT on FIIs, the FIIs approached the government expressing certain difficulty. The government considered their difficulty, and the finance minister in his budget announced that they will be exempted from MAT. Now, naturally, when you provide an exemption, you provide that exemption prospectively. For the past period, there were some judicial pronouncements which were against the FIIs. They were favorable to revenue. The judicial pronouncements confirmed, interpreted the law by saying that MAT was indeed and actually leviable. Now, when there is a judicial pronouncement, the correct thing to do against that judicial pronouncement, if you are not happy, if you are aggrieved by that, is to go to the next higher judicial forum. Now, if there is one judicial pronouncement, the answer is to go to the next higher judicial forum and not expect or pressure, not expect or not to sort of rush to the government saying that you amend the law retrospectively. That is not correct. That is not in order. Judicial body has interpreted the law. The right course of action for an aggrieved person is to go to the next higher judicial forum. In between, how can the government intervene through an executive action or by initiating a legislative action to undo something which is a part of a judicial pronouncement? And let us also keep in mind that considering their difficulties and their representations, in fact, it has to be appreciated that prospectively this problem has been resolved. The past problems which is bound by judicial pronouncements have been completely isolated, and it has to be dealt with in the proper legal manner. The due process of law has to be followed.
While following this due process of law, don't you think that this might just end up again in litigation, unending litigation? So where do you see a solution to this? I mean, obviously we understand that perhaps a retrospective relief here is out of the question, but where do you see this entire issue with the MAT on FPIs going forward?
See, as I explained to you, this is a case of expecting a retrospective exemption to be given, which arises out of a judicial pronouncement. You have to deal with that. by going to the next higher judicial forum. Now, with regard to litigation, there could be litigation arising out of this case, and naturally in every country there are there are corporates and there are individuals who are not satisfied with judicial pronouncements or regulatory pronouncements, and they go to the next higher regulatory forum or the judicial forum to seek a remedy. So, this is not something which is unusual and which is happening only in India. Tax related litigations do happen everywhere, but so far as India is concerned, we have taken number of measures to reduce litigation. Let me mention one example. When the finance minister announced in the budget that he is going to reduce the corporate tax rates from 30% to 25%, he has also said that all exemptions will be eliminated in a phased manner. And take it from me, maximum number of litigation in our country are related to exemptions. Absolutely. So, when all the exemptions are eliminated, the number of tax related litigation will substantially come down. So, it is a very concrete measure which the government has taken to reduce litigation in the country.
So, as you move towards reducing litigation, so what is the solution that you see to this entire clamour that is being created by the FIIs? Is there a possible settlement? Is there a possible negotiation? Because we are talking about 40,000 crore that is due to the government in MAT from FIIs and FPIs, right?
You see, I am not the final authority to give a pronouncement on behalf of the government. The Honorable Finance Minister and the Honorable Prime Minister, they have to take a call on such issues. But let us also remember that tax related matters are not resolved through a conciliatory mechanism or through a process of arbitration. Tax related matters have to be resolved as per the law, by amendment of the law wherever it is possible, or by seeking judicial remedy. So, in this case it is open to the FIIs to seek a judicial remedy if they are aggrieved with a judicial pronouncement of at one particular level.
In the past few months, do you believe and are you seeing an increasing case of FIIs, MNCs using the tax terror bogey to actually try and avoid what is legitimately due to the government in taxes?
See, I would not like to pass a judgment on what somebody is doing, but sometimes we feel that the criticism is unfair. The criticism against government is unfair and it does not recognize the number of measures which the government has taken in the last few months. It also, I think, glosses over the sincerity and the whole approach of the government to foster a non-adversarial tax regime, to simplify the tax structure. We have cleaned up that entire Income Tax Act provision relating to indirect transfers, the section 9(1) of the Income Tax Act. The whole section has been cleaned up. Transfer pricing, we adopted international best practices in the last July 2014 budget. With regard to the FPIs, in July 2014 budget, the finance minister announced that their income will be treated, it will not be treated as business income. So, therefore, they are not required to pay 40% tax, and the finance minister said that it will be treated for tax purposes as a capital gain. Yes. So, therefore, a number of measures have been taken, and sometimes we feel that the criticism is unfair.
What do you make of this entire issue that has erupted with Cairn? Cairn, do you think that this should have been handled better, this entire tax demand of over 20,400 crore, because this stokes the fear of the ghost of the retro tax coming back again?
You see, again, this is one issue which has to be understood and seen in the proper context, in the proper perspective. With regard to the case which you are referring to, normally we do not discuss individual cases, but yes, you have raised a particular case. In this case, the notice, the first show cause notice was issued in January 2014, well before the July 2014 budget.
Well before this new government took over.
And the process was on. The assessing officer had issued a show cause notice and he was gathering information. Company was required to furnish some information. The company took its time to furnish the information. Full information did not come. The officers had to gather information from elsewhere. So, now the case recently reached a stage where the assessing officer passed a final assessment order. So, it is an old case, and we have not deviated from the finance minister's commitment in the July 2014 budget that all fresh cases will be referred to a high level committee. Cairns was not a fresh case, it was already under process, and there something which was already under process naturally the due process of law has to be followed and the assessment has been completed.
But again we see an outcry from Cairn, which you are saying not specifically Cairn, but there has been unfair criticism of the government. Here the matter is further complicated because time and again you have tried to explain that this is a draft demand notice, but already Cairn has slapped a BIPA notice, they have dragged you to court. So where do you see this entire controversy going?
You see, the company has, I think, already gone to the High Court, and the High Court will take a view, and the High Court will give its verdict. We have to wait for the High Court orders. With regard to the BIPA notice, it will come up at some stage for consideration of the government. But again, on this BIPA issue, let me mention that it has been our consistent view that tax disputes cannot be a matter of arbitration. They have to be judicially and legally settled following the due process of law.
And another big step taken by this government has been the very comprehensive black money law, which was introduced in Parliament before it went into recess. So could you give us a sense of the disclosure window that will be available, and also have people been forthcoming? How much have you collected through this disclosure already?
Now, I will come to this black money issue beforehand, but let me also mention 2 points relating to the effort and the sincerity of the government to simplify the whole tax administration. The mutual agreement procedure with the United States was pending for a long time. It was pending for last 3-4 years. We have recently concluded the mutual agreement procedure discussions with the United States, and large number of US companies who are having problems relating to transfer pricing and related issues, those cases will get settled because of this agreement.
The map.
The map.
Yeah.
With Japan, we have started signing the advanced pricing agreement. We have already signed the advanced pricing agreement with one company. A few more companies, the advanced pricing agreements will be signed in the near future, in the coming few months, and there also again the transfer pricing issues are resolved. So we need to factor in these aspects also while we talk of the resolve of the government to provide a non-adversarial and a simplified tax administration.
My question about the black money law, how much have you collected through it, and are people forthcoming? Also, what is the disclosure window that you are looking at?
You see, black money law, the bill is before the Parliament. In all probability, we expect it will come up for discussion during this session of the Parliament, which is going to commence on the 20th of April. The law has to be first enacted by the Parliament, then the law will be notified after we get the presidential assent. So after it becomes a law, then only the question of applicability of that compliance window which we are providing, that will take effect, and then only the question of collection that will arise. With regard to the duration of the window, that is a matter which is under consideration of the government, which is under examination. It will be spelt out as and when the notification is issued.
Another issue that has been handled very deftly by your department has been the issue of HSBC India. There has been investigations, probes that date back to 2011, but finally the income tax department is moving against HSBC with the claim that they have abated in the creation of black money. So what action can we possibly see against HSBC India?
See, again, I do not want to talk about action against a particular assessee, a particular bank or a particular company. On the black money issue, we made significant progress with Switzerland last year in October, whereby Switzerland for the first time came forward to share certain information, tax related information with us based on our independent investigation.
That's a breakthrough in itself. Yeah.
That's a breakthrough, and the finance minister has spoken about it elaborately in his budget speech. I do not want to repeat what has already been said. Now, dealing with individual cases or the involvement of financial institutions or banks, they are matter of investigation. As and when investigations are completed, we will reach the required conclusions, and then action will be taken as per the law.
I'll now bring you to the entire issue of Moody's. We've seen that, they have revised India's outlook to a positive. They've just stopped short of a ratings upgrade. How will the government ensure India's credit ratings are revised? You have to remember that there are impediments that Moody's has also specified.
The government is taking, I think, action in multifarious fronts. One, of course, I can talk about is on the tax front. I have touched upon some of the points where government has taken action. The other areas have been spelt out in quite detail in a matter, have been elaborated by the finance minister in his budget speech. Overall, there is a lot of changes happening at the ground level. The Moody's change of outlook, I think it recognizes the ground realities. It's just a matter of time that hopefully Moody's will upgrade the rating. As the finance minister has said, we have to do lot more. The tax department itself also has to do lot more. We are making sincere effort, and I think in the coming days we should see a better rating from all rating institutions, including the Moody's.
Do you think these unseasonal rains could be an impediment as well? Is there any early assessment of the havoc that it could rake in for rural economy as well as the corporates who are, who base on hinterland of India for their revenues?
You see, the assessment of the damage is being done by the central and the state governments. The magnitude of the quantum of, the magnitude of the loss, that is something which is being quantified. The farmers in these areas have been affected. The damage to the crops is also extensive, and to some extent it may affect rural purchasing power. But we have to again wait and see how the southwest monsoon unfolds, and if we get a good normal southwest monsoon, part of the problem will get mitigated. With regard to its impact on tax collections, I think it will be too early to reach a conclusion.
And obviously looking forward to the Met Department's forecast on the 24th of this month. So there's a growing sense that India Inc.'s earnings have been subdued in the last quarter, in Q4. So and therefore, there's also a growing feeling that the tax collection figures that have been projected in the budget are perhaps a little too ambitious. How do you react to that?
You see, we have achieved 99.5% of the revised estimate targets of 2014-15. The revised estimate projected a collection of about 12.5 lakh crores. We have a shortfall of about 6,000 to 7,000 crores, both direct and indirect taxes put together. Indirect tax side we have exceeded, direct tax side there is a slight shortfall. So, the revised estimate figures, the revised estimate targets have been achieved. This year's budget estimate targets are very realistic, and we are quite confident that they will be achieved.
If you could just elaborate on the collections for FY15, indirect tax collections have exceeded the estimate, and what about direct tax collections? How do they stand as we speak?
You see, indirect tax collections have exceeded by about 3,000 crores, and direct taxes have fallen short by about 8,500, 9,000 crores. Now, let me add that these are provisional figures.
Absolutely.
These are provisional figures. The confirmed numbers I think we should be getting in another fortnight or so. And overall, the shortfall, as I said, is about 6,000 to 7,000 crores, and the achievement is about 99.5%. So, I can say with confidence that the fiscal deficit target of 4.1 for 14-15 will be achieved when the the final figures come in.
But would you agree with me when I say that direct tax collections have been a little bit under pressure?
Certain sectors have not done well. Mining sector didn't do well. Real estate construction sector also hasn't done well in the last year. There are various factors for that. So far as the mining sector is concerned, I think government decisions and these coal block auctions and the amendment to the mining MMDR Act, lot of bottlenecks have been removed. So, I would expect the mining activity to revive in FY16, that is in 15-16. So, we would expect better returns, better tax collections from these sectors.
So, you think that by FY16 we should see the impact of Narendra Modi's promises of taking India back to the high growth path reflecting on direct tax collections also?
We are putting in our best efforts not only to improve tax collections, but also to provide a friendly and enabling environment for business to operate in India.
I can't let you go without asking you a question on GST. I know the moment I broach the subject, you'll jump up and say you'll meet the 2016 April target deadline, that is. But sir, what about the model of the GST? Have discussions begun on that? And also the revenue neutral rate of 27% is perhaps a bit too high. I mean, it completely defeats the purpose of having a GST.
See, the revenue neutral rate you are mentioning is an old figure. Thereafter, number of changes have taken place. Petroleum has been constitutionally included in the GST, but for the time being, the states will continue to charge VAT and center will continue to levy central excise. We have also agreed on having a 1% additional tax, which will be on the principle of origin based taxation. So, this will be additional resources available to the states and to the center. So, therefore, the RNR calculations are being reworked, and with regard to the GST structure and the eventual tax rate, these are matters to be decided by the GST Council, but all the preparatory action is very much underway. There are several subcommittees which have been constituted by the Empowered Committee of State Finance Ministers with representatives of states and the central government, which are working on various aspects of GST, and all these actions are converging now in a manner that GST will come into force from next year.
You have a new head of the Empowered Committee, the Finance Minister from Kerala. You have barely 1 year to iron out all the existing issues. You still think April 2016 is a doable deadline?
When the Finance Minister said so in the budget, we were obviously aware of the timelines, and it's our endeavor, and we will maintain that commitment.
On the very optimistic note, I end my interview. Thank you so much for taking the time out and speaking to us on
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.